Assalamu alaikum and good evening. I hope everybody can hear my voice. If you cannot, just let us know in the question answer session. We can try to fix it. So thank you so much for joining the session today. The session we'll be having would be on fundamentals of Islamic banking and finance under the platform of ACCA Europe. We have a seasoned professional with us, Muhammad Farhan Al-Haq Usmani. He's part of Meezan Bank since past 13 years, and currently he's working here as Executive Vice President and Head of Sharia Audit and Advisory. Mr. Usmani joined Meezan Bank in 2005, and his main roles and responsibilities include to manage capital market product development and implementation, Sharia compliance and audit, capital markets, asset management, and Islamic financial advisory. Prior to Meezan, he has been associated to various professional advisory and consulting firms. If I talk about his credentials in education, so he's a bachelorate in business administration, commerce, and master's in economics from University of Karachi. He's also a certified Islamic banker from Center of Islamic Economics, Karachi. And he's a PhD scholar in Islamic banking and finance from University of Karachi. So before we begin the session, before I hand over the mic to him, there's a certification that we would like to tell you about. So International Institute of Islamic Bankers is offering a certification in Islamic banking and finance. This is actually a requirement for being part of the Sharia banking, and Meezan Bank is actively hiring people who have the certification, and if you do that, you become eligible for the upcoming vacancies that the organization might have. The duration of this course is just 4 months, and the good news for ACCA students, affiliates, and members is that internationally, the cost is $600, whereas because of the partnership, the cost offered for ACCA is just rupees 18,000. We'll be sharing more details about certification later on, but at the moment, I'll hand over the mic to Mr. Usmani, who can take you through the entire section. Mr. Usmani.
Thank you very much, Madad. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi, everyone. And thank you very much for joining in. I would like to thank ACCA Pakistan for taking this initiative and bridging the gap between the academia and the industry, especially related to the growing opportunities in the field of banking and finance. We'll be discussing certain areas regarding, and we'll try to clarify certain misconceptions and the questions that are being asked at various levels regarding the Islamic banking and finance. How does it work? What's the difference between conventional banking and Islamic banking? And how a professional like ACCA can play their role in this growing field. We all know the world has witnessed two major systems. First one is the capitalism, and the other one is socialism. The both are, in one way or the other, extremes. Capitalism focuses on accumulation of wealth, whereby somebody who's got the money can earn based on that money and can multiply without having a fear of anything, especially regarding justice, legalities, maybe despite certain controls in any environment. They can, just focus on multiplying their wealth. On the other hand, socialism focuses on human welfare, whereby the ultimate ownership of that particular wealth in any economy is being owned by the government, which means people have no right. The world has witnessed that both these systems, what they have offered to the general public, and unfortunately till now they haven't provided solutions for the social welfare or well-being of the general humans or the general people in the society. Now, the answer to the queries and the concerns whereby does there exist any economic system which has something for a common man? And there lies the answer that there is a system which has the benefits and the good things of both these systems, which is Islamic financial system, which means that the basic concept is, as we all know, Islam is not just a religion, it's a way of life, it's a deen. So deen teaches you not just the rituals, the basic beliefs, but it guides you in every manner, every walk of life, which includes your financial affairs, financial matters, your job, your business, and everything you're dealing with each other. So from that perspective, the basic concept of Islamic economic system is that the ultimate ownership of whatever is being offered in this world lies with Allah subhanahu wa ta'ala, and human beings are made khalifa of Allah subhanahu wa ta'ala in this world. So now you need to spend, you'll be given the opportunity to spend what you have earned, but as per the guidelines of Allah subhanahu wa ta'ala, whereby there is an inherent limitation of making a spending or in making investments, not on rather than personal interest, but on the basis of social welfare. So Islamic economic system is mainly based on the guidelines of Islamic Sharia, which is Islamic law, which suggests that you can spend, you can earn, but there are boundaries defined within it. So basis of Islamic finance is the Sharia law, which means the divine guidelines, and this is the basis of Islamic finance as well. The reason for formation of Islamic finance is obviously the world has witnessed a crisis, the financial crisis, based on the capitalism system that has been adapted by the world and the socialism. Unfortunately, none of them has provided solution to the humanities. So now the world is waiting for another system, and this system needs to be a balanced system whereby there is an element of personal well-being, but not at the cost of social well-being of the general public. And this is the system of Islamic finance. So Islamic finance, Islamic financial system has, it may start from, at the lowest segment of the society, which means we have nots considered as mustahiqeen as zakat within the Islamic Sharia. So now they have a portion as their right in the wealthy people's wealth, the accumulated wealth, which is 2.5%, zakat. So addressing from the lowest segment of the society to the middle segment, whereby the deen suggests that you need to have relations whereby you need to give each other hiba, gifts. You need to have relationship with each other whereby the best spending or the sadaqah among yourself is the amount that you spend on your family. So which means spending is considered as a noble activity if you do it in the right manner and the right activity. Now over and above that, partnerships whereby it is called the musharaka and mudaraba, it is being uh, supported by the Islamic Sharia, whereby there is a hadith Qudsi, which means whereby Allah subhanahu wa ta'ala said that if two people they start partnership with the good intentions, then the third partner will be myself, that is Allah subhanahu wa ta'ala. That shows that every segment of the society, starting from the mustaqin zakat to the partnerships and the associations, Islamic Sharia addresses all and promotes the business. So now, having said this, Islamic financial institutions are just part of this whole Islamic economic system. It's not the whole Islamic economic system. It is part of just one part of the overall economic system that is being, guided by the Islamic Sharia. Islamic financial institutions include Islamic banks, Islamic mutual funds, takaful companies. Takaful companies are alternate to conventional insurance companies. So as far as financial institutions are concerned, we have every other alternate available for the conventional financial system. In fact, we have certain other institutions like Mudaraba companies, which is a unique experience of Pakistan, whereby this product Mudaraba, which is being used globally, is being institutionalized in Pakistan. So this is another amazing experience and product that is being offered in Pakistan's financial sector. How Islamic financial institutions work? Let's talk about the bank first. As we all know that banks, they are made for the channelization of money, which means any conventional bank, their main objective is to channelize money, which means they take deposits from the depositors and they place their funds to people or areas or institution where there is a need of funds. Now, the structure, the underlying structure of these acceptance of funds and placements of funds is based on just one single concept, and that concept is they take money on the basis of borrowing, and the objective is to borrow that money at the lowest possible interest rate. And on the other hand, they lend money to the people, to the institution, and the objective is to lend that money at the highest rate of interest, which means the difference in the rates of interest is the banking spread which they earn, besides providing other services. Now, this channelization, this act of channelization of money is absolutely jais, absolutely halal and permissible. Because if somebody has got the money and he or she wants to invest it, then there is no harm in making that money channelized through a banking or financial institution and placing it in an avenue whereby this money is not being hoarded, rather saved and then being invested, which will obviously help the economy. But the way this money is being accepted, that raises huge questions. I mean, when we talk about Islamic economics, in conventional economics, we have learned that there are four factors of production: land, labor, capital, and entrepreneur. In Islamic financial system or Islamic economics, the factors of production are just three: land, the compensation is obviously rent, it is being recognized; labor, wages are being recognized at the due compensation. But as far as the remaining two factors of production are concerned, in Islamic economics, we have just one. We have combined these two factors of production into one, which means capital and entrepreneur are same. The rule is al-kharaj bid-daman, which means risk and reward lies with ownership. One cannot say that though I am the owner, I transfer all the risks to somebody else. While on the other hand, entrepreneur says, okay, I'm taking all the risk, but I don't have the money. I'll buy it from someone else or borrow it from someone else. So the point is, Islamic economic system suggests that in order to have a just economic system in place and a social justice from economic perspective, we need to have a system whereby these two factors of production are combined together, so that it's not the case that a lender is just concerned with his or her capital and the interest over it. Rather, he or she must take initiatives and decisions must form part of the business, so that he or she can take all the risk related to that business. So this is the essence, whereby a lender is not just a lender, rather he's an investor, which means he takes all the risk. So by taking all these three factors of production, that is land, labor, and capital, labor and capital and entrepreneur are just one single factor of production from Islamic economic perspective. Now, coming back to the model of bank, conventional banks, they just borrow money at the lowest possible interest rate and they lend the money at the highest possible interest rate. Now, when we talk about Islamic Bank does channelize the money, but the underlying structure is different, because we cannot borrow money, we cannot lend money on interest. So now Islamic banks work in a way whereby they accept deposits as a partnership investments, whereby whosoever comes to Islamic Bank and makes placement with Islamic banks in the form of deposits, they place those funds in the capacity of partner with Islamic banks, and that investment is not just lending, rather it's an investment as a partner. Now, it can be on the basis of musharaka or on the basis of mudaraba. Musharaka is a kind of partnership whereby two or more partners invest money and they place their funds in a Sharia compliant manner and they share the profit. Now, in Musharaka structure, depositors invest their deposits, Islamic Bank makes their investments in a combined pool of funds, and out of that pool of funds, they take out the money, they make Sharia compliant investments, and I'll come back to that area where Sharia compliant investments take place. And now, once they receive the profit, they share it on the basis of pre-agreed profit sharing ratio. Now, this term is very important because some people might mislead this, might not understand this term. It's a pre-agreed profit sharing ratio, which means that both the partners agree that whatsoever we invest, and out of that investment whatever we earn, we share it among ourselves on the basis of, let's say, 50-50%, 60-40%, 70-30%, or whatever the agreed upon ratio is. It's not a fixed percentage of return on the basis of capital investment, or it's not on the basis of capital that is being made as or amount that is being linked with the amount of capital invested. So it's profit sharing ratio that they decide. Now, on the other hand, there is another kind of deposit placements or partnership in Islamic banks, which is called mudaraba. Mudaraba is a partnership whereby one partner invests while the other partner make available his or her services, skills, and experience and expertise. In this case, in the bank's case, depositors place their funds in the capacity of a partner who makes investments in terms of money, while bank is the partner which utilizes or invests its expertise and experience of making Sharia compliant investments, and they both agree ab initio at the start about the profit sharing ratio that they will get out of that investment. Now come to that financing or investment side, whereby in terms of conventional bank, they make their placements purely on the basis of lending on the basis of interest. They use various terms for that. It may be secured, unsecured, consumer finance, corporate finance, SME commercial finance, bridge finance, project finance, or whatever the name is. What they do is they place those funds and they place those funds or give those funds to the customer as lending, and lending on the basis of interest. As far as Islamic financial institutions are concerned, they cannot lend money because it's not allowed in Sharia. And prior to having a discussion on this lending or financing area, let me explain a bit of concept of riba and interest. What is interest in Islam? There are two types of interest which are prohibited. First one is called riba nasiya or riba al-Quran, whereby it is prohibited in Quran. And this kind of riba or interest is any benefit gained in a contract of loan is riba. It can be in kind, cash, or through services. This is riba. On the other hand, there is another kind of riba which is prohibited, that's called riba al-fadl or riba al-hadith. This riba is prohibited by Hazrat Muhammad sallallahu alaihi wasallam in his famous hadith, whereby he specifically mentions few goods that while trading those goods, they must be traded in equal terms, and those goods are called amwal ribawiya. While dealing in financial institutions, we usually come across with riba nasiya, the first kind of riba, which means getting any gain out of a contract of loan. So now Islamic banks cannot earn interest or riba. Rather, out of those deposits that they accept as partnership investments from depositors, they make Sharia compliant investments, and these investments can be of three kinds. First one is trading, trading modes, trading activities. The second one is rental activity, whereby Islamic Bank purchase any specific non-consumable good and they give it to somebody on rent. So they earn profit out of it. And the third way is to give or put this amount that they gather from investments from depositors and they invest it in another participatory mode or equity participatory modes like musharaka and mudaraba. So these are the three ways whereby Islamic Bank invest. As far as trading is concerned, there are various modes. Like there are, for instance, if you take an example of a manufacturing concern whereby any manufacturer requires working capital finance for purchase of a raw material. So if they want this kind of financing, they usually go to a conventional bank and they ask for a running finance facility, which is purely lending on the basis of interest. But when we talk about Islamic banks or Islamic financial institution, what they do is they ask for what is the need, why you want financing. Let's say if there is a textile mill and they want raw cotton to make, yarn and then a gray fabric or a stitched fabric, a stitched dress out of it. Islamic bank, based on their requirement, procure or purchase those raw cotton as per their requirement out of those depositors' money and then sell it on the basis of cost plus profit basis to the customer, which is the textile mill, and earns a profit out of it. So now there is a huge difference between the two. In the first one, conventional bank lends money and they earn interest out of it, irrespective whether that money is being used to procure the raw material, that is in our case the example that I've discussed, raw cotton, or he might have used it for any other purpose like speculation, or might have taken holidays and take that money out of it. But in Islamic finance case or Islamic bank's case, they need to make sure that this money is being used to purchase raw cotton. And Islamic bank now fulfills all the requirement of Islamic Sharia for the procurement of goods, which means they accept and they take all the related risks associated with buying those commodities and yarns, cotton, raw cotton, and then they sell it on cost plus profit basis. Now, that's how the result might be the same. For instance, a conventional bank lends money to a customer, gave him 1 million rupees, and after a year takes the amount back 1.1 million, which includes 1 million principal and 0.1 million is interest. On the other hand, Islamic Bank procured the cotton priced at 1 million and they sell it on the basis of cost plus profit basis to the customer at 1.1 million. Now, both the institution might earn the same profit out of those transactions, but the procedure adopted is totally different, whereby the capacities are totally different. And in the later one, it is being made sure that these investment, the amount is being used uh, only for the purpose of buying of raw cotton rather than for anything else. This kind of trading activities includes a mode of murabaha. That term you might come across with while uh, learning and studying Islamic banking and finance. It's a very common mode, trading mode. whereby the difference between murabaha and the ordinary sale is, in murabaha, the seller sells the commodity while disclosing the cost and the profit in that particular transaction. That's the only difference. So now they use murabaha, they use salam, they use istisna, they use musawama. There are many trading modes used by Islamic banks to fulfill the requirement of general customers, corporate entities, manufacturing concerns for meeting or assisting them in meeting their working capital requirements. On the other hand, the second option is to earn with the use of the mode of rentals, which is called ijara. Ijara means to give something on rent. In that mode, what Islamic banks do is they take the money out of that depositors pool, they purchase any particular asset and give it on rent to the customer. The customer pays the rent, and this rent is ultimately the earning of the bank and the depositors. This is the second area. The third option is to participate as equity participant, which means the money is being taken on behalf of all the depositors, and the depositors and Meezan banks or any Islamic banks partnership. Bank takes that money out of this pool and they invest this money in any venture as an investing partner, like musharaka or mudaraba, and whatever the profit is being earned out of that investment, they share it. That is the bank and the depositors. So these are the major three modes being used by Islamic financial institution and Islamic banks. The real difference between Islamic financial institutions, Islamic banks, and conventional banks is the way they act. Their role is totally different on socio-economical level, operational level, conceptual level. Islamic banks are not money lenders, rather they are traders, or rather they are partners. So this is one capacity which is quite different from conventional banks. On the other hand, Islamic bankers are not just money dealers, whereby they are not in the business of dealing in papers, monies, and securities. Rather, they are actual partners, whether they are trading into the trading business, whether they are giving something on rent, or they are participating as a partner in any equity-based transaction. On the other hand, as this system is based on social justice, whereby nobody can exploit the other, it has got protection for all the partners, which includes not just the bank, but the other depositors as well. So this system is socially responsible banking, unlike conventional, whereby regardless of the amount is being used by by the customer, or the customer hasn't used that money for business purpose or any other purpose, there is no such control on it. They're just concerned with their money lended and the amount of interest earned on it. Now, coming back to the Islamic economic system, the impact of Islamic economic system, because we unfortunately tend to mix these two things together. Islamic economic system is a big connotation and term, and Islamic banks are just one part of it. So we cannot say that this Islamic bank or just one institution or these group of institutions called Islamic banks, they can bring in all the effects and impacts of a truly Islamic economic system, because it includes everything, the whole Islamic economic system, and they form just part of it. So Islamic banks are playing their role. Now, the brief history of Islamic banking in Pakistan starts with in the year 1997. Prior to that, they have lots of work together. Islamic Ideology Council, introduction of PLS-based banking system in Pakistan, introduction of Mudarabas as an institution in Pakistan. But the real practical example, successful example of Islamic banking started with the introduction of, with the launch of Al Meezan Islamic Investment Bank in the year 1997, whereby the first Islamic investment bank was formed. And in the year 2002, in a historic event, Meezan Bank became or was granted the license of Pakistan's first dedicated commercial Islamic banking. And in the year 2002, Meezan started its operation, and immediately Meezan Bank acquired the French bank SocGen, and later on Meezan Bank started its operations and started growing, mashallah, with the fastest growing rate and one of the fastest growing institutions in Pakistan. And now Meezan Bank has got the privilege, or you know, a great experience of not just buying three big multinational conventional institutions, rather they also have the experience of converting them into Islamic, which includes the French bank SocGen that I've just mentioned. And then subsequently Meezan Bank acquired HSBC Pakistan operations, and then HSBC Oman Pakistan operations. So alhamdulillah, this is the success story globally. Islamic banking is becoming the talk of the town. We all have witnessed the global financial crisis that has attracted Islamic financial system as an alternate system to conventional or capitalistic or socialistic systems. Another important thing is Islamic financial institutions during these financial during the era of financial crisis, they were the least affected institutions, which bring them into attention as to how this has happened, because they were ethical, because there was no excessive risk taking in those institutions, which is against the laws of Sharia, which is called gharar, uncertainty. So they were not, gharar kasir in those transactions. So they were least affected. Now the world has witnessed, and now that is the reason why Europe and the developed countries, they are looking into this option. They are exploring this options. There is, you can say, a silent war going on between certain countries in Europe, whereby London claims that they are the hub of Islamic finance globally. On the other hand, Luxembourg, they are into this business, and they say the majority of the Islamic financial institutions are in Luxembourg. So we need to call this Luxembourg as a global hub. On the other hand, France wants Paris to be the hub of global Islamic finance. So alhamdulillah, the trend is growing. There are lots of opportunities in Islamic banking and finance for the learned professionals. Not just that I'm interested in this field, we need to learn this. Alhamdulillah, as far as Pakistan is concerned, by law, any new financial institution entering Pakistan needs to be only Sharia compliant institution, which means no bank will be granted a license to operate in Pakistan other than an Islamic bank by the Central Bank of Pakistan. So that's a great opportunity whereby professionals like ACCAs, they have great potential and opportunity for them to join this growing field, whereby the since 1975 the average growth rate is between 10 to 15% per annum of this sector globally, which is quite interesting. On the other hand, uh, experts like EY and Malaysian Islamic financial sector predicts the size of the Islamic market to hit $3.4 trillion at the end of 2018. That shows the amount. This is not negligible. There is a huge potential there for the learned professionals who are not just interested, rather they know the tricks of the trade. And for that, from that perspective, ACCA and Meezan Bank and Meezan Bank's external learning arm, which is called International Institute of Islamic Bankers, which is Pakistan's first institution accredited by Finance Accreditation Agency Malaysia, which is a global accreditation agency developed by Bank Negara, the Central Bank of Malaysia. So they have joined hands together for the development of our members, ACCA members, and ACCA students today, so that they can learn from the experts. They can learn in the best possible manner the tricks of the trade, and they can take benefit out of this globally growing field of Islamic finance. As a gesture of goodwill and based on our cordial relationship between these two institutions, we have offered a special discount as mentioned initially. So I urge and I highly recommend this certification to all the potential candidates for the Islamic banking industry in Pakistan. Currently, we are looking for ACCA associates, and the eligibility criteria to enter the evaluation scene would be to have this certification, or at least based on the recommendation or request made by the ACCA team in Pakistan, at least those students who are enrolled in these programs will be eligible for evaluation, and they'll go through an extensive evaluation process. And once selected, inshallah, they'll be offered a contract. And you all know that this experience, being the partner employer of ACCA, your experience will count in your career, and it's a very good opportunity for the students, especially in Pakistan, to take advantage of this and be part of this ever-growing industry of Islamic banking in Pakistan, not just in Pakistan, but globally. I'll now take questions if you have, and we'll see uh, how can we address those questions.
You want the questions?
Yes, please.
Okay, so I'm gonna take each question one at a time.
Okay.
And I'm just gonna shoot them to you.
Please.
So starting from the top, starting from the bottom actually.
Okay.
Okay, so he's asking that what about the final question? SPP, which is something about SPP. It's pretty long. So all banks in Pakistan, Islamic or conventional, have to deal with SBP for borrowing and lending of funds, on which basis they borrow funds from SBP and earn profit from lending for customers. How is then Islamic banking different from conventional?
Okay, that's a very good question. I mean, these are a few pet questions that I face every time. As far as the State Bank is concerned, State Bank is not just a lender of last resort or banking institution that control the market operations of money. Rather, it's a bank of the government as well. It's a regulator as well. So in various capacities, State Bank works. State Bank is the institution that issues the license or grant the license to any Islamic or conventional banking institution. The license that they issue to Islamic Bank, the first clause mentions that Islamic banks cannot deal with any interest-based activity. So Islamic banks, let me clarify this thing, they do not, even if they want to, they cannot enter into any interest-based activity. Now, when we talk about dealing with State Bank, whenever State Bank issue any interest-based instrument, they do not invite Islamic banks. Islamic banks do not participate in any open market operation or any investment opportunity that comes from State Bank that is conventional, using a conventional instrument. Rather, there are Sharia compliant alternates available, which includes sukuk, which are Islamic alternate to bonds, conventional bonds. So whenever State Bank, Government of Pakistan, even privately placed sukuk, they issue, Islamic banks invest those. On the other hand, if there isn't any instrument which is SLR eligible, SLR is statutory liquidity requirement that every financial institution needs to place their funds with State Bank. If there isn't any instrument available, then Islamic Bank place their funds in cash at 0%, unlike conventional. So that's how, alhamdulillah, Islamic Bank has their State Bank has their own Sharia supervisory board. At State Bank, they have a dedicated Islamic banking department that issues guidelines, policies, and regulations for Islamic Bank. So alhamdulillah, both these systems are running parallel to each other, and they are quite segregated, though being dealt by just one regulator, which is the State Bank of Pakistan. But they do keep these things in mind, that Islamic banks cannot indulge in any activity related to interest. So they are quite segregated, and Islamic banks do not deal in any instrument or activity whereby interest is involved.
Okay, thank you. This another question is related to what you just spoke about. They're asking that how are saving accounts allowed in Islamic Bank if there are no interests?
Okay, I just mentioned that saving accounts or even term deposits that are being accepted by Islamic banks are not on the basis of borrowing on interest, rather, they are on the basis of partnerships like Musharaka or Mudaraba, whereby the depositors place their funds as partners. Islamic banks use those funds and invest them in a Sharia compliant manner that I just mentioned, like trading activities, rental activities, or equity participation activities. And then out of the returns earned from those investments, they share the profit to the depositors. So that's how remunerative accounts at Islamic Bank works.
Okay, so the next question is related to Kaibor, um, where they're saying that Islamic banks also use Kaibor, same as conventional, for the base rate. So there should be some alternate measure which must be 100% Sharia based.
Okay, that's another common question, a very good question. I mean, I hope that we all understand and know, being a student of ACCA, that what Kaibor or LIBOR is. Being part of academia as well, once I asked in a class, that is, what is Kaibor? And the answer was Karachi Interbank Offer Rate. Then I asked LIBOR, and they say it's Lahore Interbank Offer Rate. So I really hope that we do understand how Kaibor is made. Kaibor it's a reference rate which is calculated by averaging out the average rate of lending or borrowing of top banks in Karachi, which means there isn't a guarantee whereby even the bank themselves have done any transaction on that particular rate that they have quoted, because it's an average rate whereby the top and the bottom extremes are eliminated to come up with an average rate. Now, unfortunately, at the moment, the top banks in Karachi are conventional banks whereby they refer their dealings, the average rate with which they lend or borrow the money is on the basis of interest. Once Islam, once they are being replaced with Islamic banks as the top banks in Karachi, Kaibor will remain the same. But now Islamic banks will be dealing with each other not on the basis of lending on interest or borrowing on interest, rather they'll be dealing with the partnership modes like Musharka and Mudaraba. So there will be an expected profit rate or actual profit rate averaging out and comes out as Kaibor. So Kaibor is a reference rate. Now what Islamic banks do is they do not use Kaibor for lending or borrowing of money on the basis of interest. Rather, they take it as a reference rate, and then they may add the profit in a trading transaction that I mentioned while giving an example of the trading transaction, whereby, let's say, if there is a client who takes running finance from a conventional institution of 1 million for 1 year at the rate of 10% Kaibor or interest rate, and at the end of the year they gave it back as 1.1 million. While Islamic banks, they take the reference rate of Kaibor as 10% per annum, they purchase those cotton at 1 million, they add the profit of 0.1 million, which is similar to Kaibor rate, but adds a profit actually, which they earn in a trading activity. So that's how it is different. And Kaibor is just a reference rate, nothing actual. So there is no harm in using Kaibor as a reference rate for marking your profits or rentals. On the other hand, just to segregate and differentiate ourselves from the conventional banking system, we have already worked on alternatives. Unfortunately, currently, relatively, the size of the market is bit small. Once we grow and substantial market share is taken over by the Islamic banks, then this will be used as a benchmark of, then they will use their own benchmark, which will be inshallah called IBOR, maybe the Islamic interbank offer rate. But we have worked on that.
Okay, great. Next question is, are there any chances of losses in Islamic Bank banking, and if there are those losses passed on to consumers?
Okay, very good question. And the common question, I mean, and that question is being posed in quite a sugar-coated manner. Usually, people ask question as Islamic banking is based on the profit and loss sharing. So, can you just I would like to meet a person who is a customer of Islamic Bank and who has suffered a loss. So, well, actually, Islamic banking is definitely based on the concept of profit and loss sharing. The fundamental rule of Islamic fiqh, that is Sharia, is profit can be shared as per the agreed upon ratio, but loss will always be shared as per the ratio of investment. Now, taking out from this rule, what we do is, in case if we take somebody's, let's say, deposit of 2 million, we buys a car and we give this car on rent to somebody, and God forbid the car is stolen, lost, and there is no coverage or protection to it, then, and it's in a natural course of business, then the one client who has made the investment will suffer the huge loss because it's normal course of business. That's the rule of the law. Now, we use certain risk mitigants, like we develop a depositor's pool of money. Rather than making an individual's money invest in one single transaction, we club it with all the depositors to come up with the billions of rupees deposit. Now, this pool of funds, each depositor is proportionate owner of his or her investment in that pool. Out of that pool of deposit, we took out 2 million rupees, buys a car, and then give it on rent. Now, in case if that car is destroyed, the loss of 2 million is distributed among hundreds of thousands of customers and billions of rupees, which comes out to few paisas or even just few rupees per month. And that is the reason, even if the profit sharing ratio of every depositor remains the same for another month, the returns are different as compared to the previous month. This is the case, this is the actual practice, and that is the reason why there, because of certain losses, the loss is being distributed to all the depositors, so they come up with, I mean, in case God forbid, if all the assets or investments made by Islamic Bank are destroyed in the natural course of business, then they need to face the loss. That's reality. But we use risk management tools. We make sure to invest in relatively less riskier revenues, and that is the reason why, alhamdulillah, there is nobody who suffers a loss of their investment. Rather, sometimes they face the loss of their returns. But overall, alhamdulillah, because we maintain a portfolio, based on those portfolio management, we come up with, alhamdulillah, good revenues and returns.
Okay, so next question is that if you can share in your opinion, um, what sort of improvement Islamic banking bringing to the economy?
Okay, as we all know that our circular debt level in the country, and the foreign debt level, and the deficit in the balance of trade and balance of payments that our country is facing right now, the biggest reason is where that money has gone. I mean, the money that we have taken as a loan from outside, even from the domestic financial institution, where they have gone. The answer is Islamic banks. As I mentioned during my discussion, that in conventional bank, the lenders are just concerned with the security, the rate of interest that they're going to charge on the lended amount, and the principal, and that is it. They're not concerned as to where that money has gone, how it is being used. Unlike conventional and Islamic bank, either you are trader, or you are giving something on rent, or you are equity participant or a partner. Now, if that is the case, you need to be you need to make sure, as an investor, as a bank, that your money is being used in the right manner. If you're trading it, you need to have commodity which is being purchased and sold at cost plus profit basis. If you are giving it on rent, you need to purchase that asset and provide the customer to use that asset, and the asset should be in a usable form so as to earn the rent. And third is, as a partner, you need to make investment in a Sharia compliant manner and make sure that this money is being used for the right purpose. So Islamic banks and Islamic financial institution ensures that this money is being used in correct manner. This is one of the benefits. The second thing is, as the system is based on justice and social welfare, so nobody is allowed to take excessive risk out of it, which is, as I mentioned, called gharar. Gharar is not allowed in Islamic financial transactions. On the other hand, as far as excessive taking risk, which is qimar, is not allowed, as is the case with riba. I mean, I have a quote with me of Honorable President of Nigeria, Mr. Olusegun Obasanjo, and he said all that we had borrowed up to 1985 or 1986 was around 5 billion US dollars, and we have paid about 16 billion US dollars yet. We are still being told that we owe about 28 billion dollars. The 28 billion came about because of the injustice in the foreign creditors' interest rates. If you ask me what is the worst thing in the world, I'll say it is compound interest. Islamic financial system, Islamic banking is the solution and the answer to these kind of challenges that the economy face. I mean, a person like Einstein once said, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Compound interest is the most powerful force in the universe, and the world is currently witnessing the evils of this interest, whereby third world debt level has crossed a limit whereby it might never be repaid, which means it's a form of global slavery. And the answer to that is Islamic finance. So, I mean, obviously, as I mentioned earlier, we might not be able to see all the benefits of Islamic financial system at the moment, but Islamic banking is just part of the overall Islamic economic system. And inshallah, with the growth of Islamic banking, overall Islamic economic system, we'll see the benefits out of it, inshallah.
Okay, so this person, I think this was covered, but he just wants to know a little more about ijara and iktina.
Okay. Well, ijara wa iqtina is ijara, which means to give something on rent, and iqtina, which means at the end of the leased period or the rental period, through a separate agreement and arrangement, if somebody buys that asset. For instance, if I take car from somebody on rent, and let's say the agreement was for a 1 year period, and after 1 year period, I request him that I want to buy this car from you, and through a separate agreement, not as part of the kiraya agreement or the rental agreement, actually through a separate sale agreement or maybe through a gift deed, if that asset is being sold to me or given to me, then this kind of ijara is called ijara wa iqtara.
Okay, this is related to time value of money. So he wants to know what is the application of time value and money on trading and mudaraba.
Okay. There are rules, and as far as firstly we need to understand the role and capacity of money in Islamic finance. Money is just a medium of exchange in Islamic finance, and does not have any intrinsic utility in itself. We do consider it as an asset, but as it doesn't have any intrinsic utility in it, then this money, we do, Islamic finance does recognize the concept of time value of money, but solely on money is not allowed. Maybe any particular, in combination with any particular asset, this concept is being recognized in Islam, and we can charge our returns or profits out of those trading or rental transaction on the concept of time value of money, but not just on the basis of solely money.
This is regarding stock exchange. So he wants to know, isn't an alternative in Islamic finance through which stock exchange trading can be done?
Yes, I mean, by purchasing shares in the stock market, you become part owner of that particular institution whose shares are being bought. Now, this is accordingly with the guidelines of Sharia. that you become partner, but we need to evaluate few things, whereby the topmost is the nature of the business. I mean, if you're becoming part of an institution by buying shares, which is involved in the business of riba, or let's say other impermissible activities, then it's not allowed. Now, it's not just about the nature, rather, scholars have developed certain criteria whereby any particular institution or its scripts are evaluated, and once they become eligible, only then we can invest in a Sharia compliant manner. For convenience, I can say an initiative is being taken by Pakistan Stock Exchange in collaboration with Meezan, and we have developed two stock indices. First one is called KMI 30 index. K means Karachi Stock Exchange when it was used to be KSE. M for Meezan, I for Islamic 30 index, and based on the success of KMI 30, we developed KMI All Shares Index. This All Share Index includes out of the whole universe of all listed companies at PSX, and out of those we screen them on the basis of criteria developed by Sharia scholars to come up with a list of Sharia eligible securities and instruments whereby one can make investments in a Sharia compliant manner. So it can be done, it is being done, and that's how Islamic mutual funds make their investment in a Sharia compliant manner.
Okay, great, thank you. This question actually has two questions. So Muhammad Bilal wants to know what's the difference between asset-backed financing and asset-based financing? That's one. Second question is what's the difference between Sharia compliant and Sharia based financing?
Okay, I mean, to be honest with you, these are just the terms being used for I mean, maybe at the academic level. As far as Sharia backed, asset backed or asset based transaction, obviously, usually all the financing transaction are asset based, and they have their underlying assets in it. I mean, even in conventional finance, you tend to issue a bond, and whereby these bonds are, underlying asset is receivables, which is asset. As far as backed is concerned, asset-backed securities means that these transactions must have any tangible or illiquid asset in it. That's the term in the academic circle being used. Now, the other question was regarding Sharia backed,
It
Sharia
was
based.
Sharia compliant and Sharia based financing.
Okay, these are quite similar actually. Sharia compliant means as in line with the guidelines and rules of Sharia, and that is the big. I mean, that's the same thing as Sharia based. So Sharia compliant or Sharia based things are both same, similar things.
Okay. Next question is, can you tell a bit about Sukuk?
Okay. As far as Sukuk are concerned, Sukuk are Sharia compliant securities issued, structured, and traded in line with the guidelines of Sharia. It can be structured. There are tradable sukuk, non-tradable, which means held to maturity instruments. Uh, Sukuk is basically a security that represents proportionate ownership in the ownership or the usufruct of any particular asset that is being used in a Sharia compliant manner.
Okay. So this person wants to know that how does Islamic Bank lend money to entrepreneurs who are new in the market?
Well, I mean, as far as whether that's a different question, that is purely a risk-based question, risk management perspective. From risk management perspective, obviously one tend to evaluate whether you deal with anybody who has a reputation, who is experienced in the market, because we are the ameen of the depositors' money as well, whereby we become partners and we bring in our experience and expertise of using or making investments out of that money in a Sharia compliant manner, yet in a viable avenue. Now, if somebody doesn't have any experience, he's got just few ideas, doesn't have any security, doesn't have any, proper plan, nobody's going to, make his or her investment in that avenue. Same as the case with Islamic Bank. If you have a good plan, if you have a good security, you have reasonable team, and the project is viable, we'll be definitely going to assist you, maybe either through trading mode or in the rental mode or by making equity participation.
Okay, great. This is regarding Meezan Bank specifically.
Yes.
So, is the bank planning to introduce Islamic credit card anytime soon?
Well, we already have a Sharia compliant debit card powered by Mastercard and as well as Visa. Uh, it has all the attributes and qualities of a good card. It is being accepted globally, worldwide, as well as on internet. But on the other hand, when we talk about credit card, currently we don't intend to issue any credit card in near future.
Okay, so I'm sorry, there's just a lot of questions that they're just popping up and up.
Okay.
So the next one is, it's a little technical. So I'm just going to read it out. So Mohammed Arshad wants to know a little bit about overdraft facility alternate in Islamic banking as it links to the working capital finance requirement.
Okay, ji. As far as overdraft facility OD is concerned, we don't have any facility like overdraft facility. But as far as working capital solutions are concerned, we have, alhamdulillah, facilities and products. There is a product which is not exactly similar to conventional overdraft facility. Rather, it's by making an investment, by becoming a partner to that particular business. It's called a running musharaka. So you can say that the requirement of any working capital requirement of any institution can be met through running musharaka in a Sharia compliant manner, but there is no exact alternate to OD in Islamic finance, obviously.
Okay, so I know the time is running out. We committed till 4 o'clock. So I'm just going to take last 3 to 4 questions. And even if there are any more questions which are left, you can just write back to us and we'll try to answer those through email. Yeah, so I'm just going to take last 3 questions, whichever they are. Okay, so Muhammad Shahmir wants to know, is there a regulatory body which keeps in check whether a bank is following the Sharia regularly or not?
Yes, we have State Bank of Pakistan, as I mentioned. They are the regulators for all banks. They have their own Sharia supervisory board. They have various departments, including Islamic banking, dedicated Islamic banking departments, who are very good regulators. Alhamdulillah, they are being awarded one of the best global regulators, providing conducive environment for the growth of Islamic banking and finance in the country. So we have a very good regulator.
Okay,
Alhamdulillah.
okay, great. And how does Islamic Bank come up with an option of penalty on late payment or the basis that justifies the act in the light of Islam?
Okay, okay. Well, let me clarify this thing. Any Islamic bank cannot earn a single penny out of late payment penalty charges. They cannot charge anything. Now, having said this, Islamic banks, when they cannot, earn anything out of it, so there is no interest of Islamic banks taking that money as a penalty from customer. But on the other hand, as far as customers are concerned, not every other customer, there are few who tend to, by knowing this opportunity, they try to make this as an opportunity, and whereby, despite their promise, they tend to, extend the repayment date without increasing any amount, because in conventional you tend to charge for further interest on delayed payments. But in Islamic finance, we cannot do that. In order to address that issue, scholars come up with a solution whereby while doing any trading activity, rental activity, we tend to seek an undertaking or a promise from customer, whereby the customer is being asked to undertake that if there is a willful default on part of customer is going to pay that much amount of charity. So now this amount goes to charity, but it's a deterrent, so that customer should not or will not may not willfully default or delay the payment. That's the objective of taking this charity. Banks doesn't use that charity in their own interest. Obviously, this is being audited and taken care of by regulators as well as internal audits as well. So that's how Islamic banks uses it as a deterrent.
Okay. I know there's a huge list, but I'm just going to entertain this last question. I understand that you all have queries and you want to know, but we'll be having these quarterly sessions. We'll be telling you more about it. I'm just going to say out the last question and then we'll just end the session. So, Kesar wants to know what is the basic difference between lease and ijara, as he has dealt with both the facilities and found it to be just a difference of terminologies.
Okay. Another common question. I wonder if he got the opportunity to read the agreements in between. I mean, obviously, as far as lease is concerned, the lease that he might have dealt with would be the finance lease. But on the other hand, when we talk about ijara is more closer to an operating lease. If just one single difference that I mean, there are lots of differences, but just one single difference that separates the two is in conventional leasing agreement, the lessor can unilaterally change the whatever you call it, the installment, the rental, or whatever it is. But in Islamic, one cannot unilaterally do that. In order to change the rent, both the once agreed. Now, during the period, conventional leasing facility in the conventional leasing, conventional financial institution can change the rental or the returns or the whatever you call it, the installment. But in Islamic, we cannot do that. In order to do that, both the lessor and the lessee must agree. In case if one doesn't, the other cannot change it unilaterally. So this is a big difference. I wonder if you got the opportunity to read your agreement. I would urge that you better go through those agreements. Obviously, it's just like opening an account in any conventional bank or an Islamic bank, whereby you both in both the circumstances you have to sign an account opening form. But the actual difference is whatever is written inside that account opening form. In Islamic, a depositor comes as a partner in a mudaraba or musharaka agreement, while in conventional you give the you lend the money to the bank. So there is a huge difference in the capacities and the related risk and reward. I would suggest, taking this opportunity, I would like to suggest and recommend all of you to just go through these books. This is Islamic Finance, written by Dr. Imran Ashraf Usmani, and this book is an introduction to Islamic finance. Uh, they have all the details related to the basic modes of Islamic banking and finance, and it will be very helpful in clearing certain doubts and in addressing the basic concerns and queries that you have raised. So it will be a very good read, inshallah, for all of you.
Great. With this, I would conclude the session with Mr. Osmani. Thank you so much for taking the time out. This was really informative. I was getting a lot of comments about what great session this is and how this is adding value to their career.
Thank you very
So
much.
thank you so much. Just a few things that I would like the audience to know. We will be sending the recording of the session to all the attendees who have registered. It will also be available on our YouTube and Vimeo channels, and we will also be posting it on Meezan Bank's Facebook page. So you can refer over there or download from there and watch it again in case if you have missed any part. For the certificate of the attendance for today's session, you will be getting that through email on the same email address you have registered with for this session. The other certificate I mentioned about, you were asking questions about that too. You will get a detailed email over that. Please watch out for your for any email that comes from gearuppk@accglobal.com. Aside to that, if you still have any queries, feel free to write to us. You can drop your questions at gearup.pk@accglobal.com, and we'll be happy to answer as many questions as we can. We will be conducting quarterly sessions over Islamic banking, some topic or the other. So please do join in. If you haven't been answered now, you will be answered then. Thank you once again for joining the session. We love to have the entire audience with us, and we really hope that this really adds value. Thank you so much.
Are you done? Not here?
Yeah, we're just closing it.
Okay.
Continue.